Living Longer, Living Better is your television magazine highlighting lifestyles, hobbies, sports, health, travel, people, and places in our community, and much more. Information, ideas, and knowledge that will encourage new thinking and provide insights into our community. Plus, sharing fun activities of all types, understanding options for financial well-being, and making life more enjoyable. Join us on the journey exploring the many facets of living longer, living better.
Hello there and welcome to Living Longer, Living Better. I have a phenomenal guest today, and it is Dr. Lawrence Lustig. He is the Division Chief of Otology and Neurotology at the University of California, San Francisco. That's a long title, Doctor.
It is. My parents have a hard time pronouncing it.
Got to keep them respecting. But tell us about how, this is a fascinating, fascinating topic, because as we age, we start to lose our hearing, our ability to decipher things, and you do such intricate operations. Tell me how you even got into this.
Well, it's, I think anybody who studies the ear falls in love with it. So really what the specialty means, otology and neurotology, it has everything to do with the ear. And all the nerves that come into the ear and all the structures that interface with the ear. And I can recall a lecture, my first year of medical school, where we had what in retrospect was a world-famous professor of physiology who came and taught us how the ear worked. And it was one of the most elegant examples of how Mother Nature solves a problem, which is how to take sound vibrations, which is the nature of sound, and convert it to a way that the brain can understand.
And as I went through the material prior to us meeting here, it is amazing that we're living so much longer. Is that why it seems to be coming up more, that we're living to be older, and as we age, the ear ages, and so they lose? This is a very frustrating thing with people like us, with our parents.
Well, you know, age-related hearing loss has been with us for as long as there have been people. And it was really first described back in the late 1800s. But as you just look at the population in America, as it continues to age, it's becoming a problem that's more and more evident because there's just increasing numbers of people with hearing loss. And I think with the baby boomers coming of age, as they start to hit 65, a very robust, interactive group of people, they just become much more proactive with this problem, and they want to hear more about it.
And what should they do? I mean, how can you tell if you're really starting to lose your, I mean, other than saying, oh, I hear no one ever, but how can they go about staying on top of this issue?
Well, the first thing to do is, if you think you have a hearing loss, or oftentimes it's a spouse or a friend that tells you they think you have a hearing loss, the best thing to do is go and get your hearing checked by an audiologist. It's a simple test, an audiogram. They play sounds, and you just respond to the sounds that you hear. And from that, we come up with a hearing pattern that we can tell you what we think is going on.
And I also read that as you allow it to go along, it can get worse. I mean, there's a deadening within the little fibers, the little nerve cells that occurs, and it can be brought on by either aging or loud noises. Well,
there's a whole huge host of things that can lead to hearing loss.
Okay.
And age is one of them. Age is because we all age, and our hearing goes as we age. This is just, if you look at people's hearing patterns as they age, we lose, you know, a certain amount every year. For some people it's faster, for some people it's slower. And that rate of change can be influenced with things like what your genetic makeup is, what your underlying genes are that predispose you to a more rapid or slower hearing loss over time. The amount of noise you're exposed to definitely impacts your hearing loss over time. Underlying medical conditions. We know things that can affect small blood vessels can also affect your hearing as you age as well.
Well, I read, again, I wanted to make sure that I had at least a few of the things up here in my brain, but the fact that you can take what is it, the vitamin, antioxidants, and that they might actually help?
So there's some really interesting research that's been done looking at antioxidants and age-related hearing loss, and it's been done in animals. We can't really do those studies in humans because the numbers that we would need are too great. But if you look at laboratory rodents, mice and rats, if you feed them antioxidants, over time, those mice are going to have a decreased rate of hearing loss compared to those mice that didn't get the antioxidants. And there's another drug called N-acetylcysteine, or NAC, also called mucirmis. It's a drug that's commonly used to treat liver toxicity if someone maybe takes too much Tylenol. And we give that to them to prevent the liver damage. Well, it's been shown that if you take that medication before your noise exposure and continue it through the noise exposure and after the noise exposure, you can prevent noise-induced hearing loss. That's not necessarily going to prevent age-related hearing loss, but again, we think those two problems are related somehow.
Well, I think it's fascinating that they're coming up with these herbs and these antioxidants and things like that to slow this aging process. Yeah,
and you know, if you look at the amount of antioxidants you have to take, it's a pretty large amount, and the cost of those isn't cheap. But there doesn't seem to be too much downside to taking them. So if a patient comes in and asks me, should I take it? I say, well, if it doesn't hurt the pocketbook too much, sure, give it a try. The reality is we don't know for certain if taking high-dose antioxidants over time is going to help you.
Well, they seem to go back and forth. Caffeine was bad for you. Now it's supposed to be good for you in small doses. So, you know, I think it's kind of a process that we just go through. You learn as you go because we are living to be so much older.
That's absolutely true. And I give patients the Oscar Wilde admonition: moderation in everything you do, including moderation.
Well, with regards to the young children I see, and this is kind of, we've got about a minute here, what would you say with regards to children going to very, very loud venues and their ears? I worry about that when I see babies at rock concerts.
You know, there are very few things that we can do to prevent age-related hearing loss. And there is definitely a link between noise exposure when you're younger and the rate of hearing loss as you age. That is, if you're exposed to loud noises at a young age, you're going to have an increased rate of hearing loss over time. And that's been shown not only in human populations, but in animal populations. And the one thing that we as humans can do is use hearing protection. So I tell patients, you don't have to forego going to concerts or nightclubs where there's loud noise, just wear good ear protection. And that will do more than just about anything you can do to prevent age-related hearing loss over time.
Well, we're going to delve into that some more. Thank you, Dr. Lustig, for being here. So you stay tuned. We'll be back with a second part of this hearing loss.
Today, Sotheby's International Realty, bringing new technology to a 200-year-old tradition while serving the San Francisco Peninsula, Silicon Valley, and clientele worldwide.
Bobbi Decker is a realtor that cares about community. Few things say more about Bobbi's commitment than her support of many of our local charities.
One of my favorite things to do is to give back to nonprofits that are in our communities. Peninsula Humane Society, which takes care of our furry little friends, making sure none of them are abandoned. To Career Closet, which makes sure that the women who go there are outfitted with clothes so that they can get jobs. To College Track, which ensures that the students are not forgotten halfway through their college career. They have enough money to actually finish. And then there's Build, which helps miniature entrepreneurs become big entrepreneurs. All of it's giving back to nonprofits that make a difference, and that makes me feel good. Hello there, and I'm here today with Jennifer Jenuhl, who is a long-term care insurance provider. And well, you actually are able to do it for all of us who are getting older.
Right.
And don't want to hear about it. But Jennifer, thank you so much for being here, because I know it's something that we really need to do, and I know you have the statistics at the tip of your tongue.
Well, we're all living longer, as you know,
Yes.
and actually people are living into their 80s and 90s routinely, and the very fact that we live longer is our health could change, and when our health changes, we need care. And the Department of Health and Human Services, on their website, it says that 70% of people who reach age 65 are going to need long-term care. And I believe those statistics were taken from the last census. That's how they came up with that.
Well, and it's so true. They say that if you're healthy at 50, you're probably going to live to be 100.
Absolutely.
They didn't say how your health was going to rock and roll after 80, though, or even 75. And we tend just to procrastinate, just human nature to do that. But I have watched people get wiped out financially by not having that component. And I remember you were after me, and that's why I wanted to bring this information to our viewers. You were after me at quite what I thought was quite a young age, but it was affordable. You kept saying that to me.
Right. Long-term care is very expensive. Like in the state of California, it's about $80,000 a year for a skilled nursing facility. It's about $48,000 a year for assisted living. And home care, you can pay anywhere from $18 to $20 an hour. And so most people just don't have that money sitting around to pay for long-term care.
And I know that the insurance, if you purchase it at the younger age that I did, the premium is so much less.
It's so much cheaper if you buy it when you're younger, say early 50s, and you're usually in good health, so you're going to get the best rates. And there's three components to the cost of long-term care insurance: your age, your health, and what benefits you buy. And you can pretty much structure your own policy, but you can't change your age or your health at the time that you buy it. And you're really locking in that age and that health, and because these policies are guaranteed renewable, so the companies, the carriers, can never drop you. The only way that your insurance would be dropped if you didn't pay your premium. So if you buy it today and next month, next year, you get Alzheimer's, they will pay. And so that's the good news.
Well, what are that third component on structuring it? Is it so many days? Is it deductibles? I mean, does it work like medical insurance, or how does that work?
Well, you can pick how many years of care you want the company to pay you, and how much you want it to pay you per day, and then you pick a deductible, and then you want to be sure you add an inflation rider on the policy, because if it's costing $200 a day today and you don't need it till 20 years out, you really want to make sure that you've put some kind of inflation protection on there. Otherwise, you'll end up having to pay a lot of money out of your pocket.
Well, you know, the Living Longer, Living Better program that we do here at Penn TV, we want to get all this information out to the seniors and out to people who would need it. And it seems like they want to wait until they're 70 or 75 or 80 to get the insurance, but isn't it like triple the cost if they do something like that?
Well, no one wants to think about that they're going to need care. That's the first thing. We don't like to think about that, but if you go to any nursing home, they're full. So there is a huge need, and if people wait and procrastinate, it's just going to cost them more. So it'll never be any cheaper than they are today, you know, as far as age and health. And yes, it could easily be triple, and the cost of the insurance goes up all the time.
And then you probably could get to a point where you don't have it.
Well, the thing
or they
is,
won't give it to you.
The pitfall is that you might not medically qualify because this type of insurance you have to medically qualify. The company's asked to get your permission to see your medical records, and that's what they base whether they take you or not on, whether you qualify to get the coverage. And underwriting takes about 6 to 8 weeks. So from the time you apply for a policy, you know, you go through underwriting and then you get a decision. But the people that I've talked to who bought it, I've asked them, why did you buy it? And they said they don't want to burden their children or their wife. They want to have peace of mind. They want to protect their retirement assets, because if you've made a retirement plan and all of a sudden you have to pay $4,000, $5,000, $7,000 a month for care, it'll blow up the retirement plan. You will be spending that money for long-term care.
Right.
And long-term care insurance is a way to leverage your money. People tell me, oh, I'll self-insure, I'll save. But if you can get $400,000 tomorrow from a long-term care policy, how long is it going to take you to save that much money, whereas you could have it next week?
Well, I know at one time we could save it in the stock market, but every time they get us up to a certain point, they seem to take us back down that chute again.
Yeah, they're up and they're down.
Oh my gosh, are they ever? But I actually have watched clients get wiped out by something like that. Their house goes, all of that retirement money, because it's so expensive.
It's very expensive. And my own dad was paralyzed from an auto accident when he was 55. So you don't have to be old to need long-term care. About 40% of the people under 64 need long-term care. And,
really?
And in the case of my dad, after he was paralyzed, he lived another 30 years.
Wow.
And he had no long-term care insurance.
Oh.
So it's devastating what it does to the family, physically, mentally, financially, emotionally. If you're not prepared or haven't made a plan, you're just operating in chaos.
Well, prior planning prevents really bad performance. And Jennifer has told us here that, you know, it's very, very cool for you to share all of this with us. And I know that one of the reasons I got it was just peace of mind.
Yes.
So peace of mind, that's what living longer, living better is all about. So just take these little antidotes we bring to you and all of these tidbits and all of this helpful information and make sure you utilize it. Thank you for tuning in.
Today, Sotheby's International Realty, bringing new technology to a 200-year-old tradition while serving the San Francisco Peninsula, Silicon Valley, and clientele worldwide.
Bobbi Decker is an award-winning veteran of the real estate industry. She has assisted hundreds of clients in Northern California to buy and sell properties successfully, as well as educating the public via her television, web, and/or newspaper articles.
As a former high school teacher of biology, my students' success was my #1 priority. Now, as a real estate broker, educating and informing my clients and readers and viewers is my new priority. Well, welcome, and we have Cucchiara again today, and we're going to be speaking on reverse mortgages, because that's something on the tip of everyone's tongue, because we're all aging so quickly, quicker than we ever thought, and you're going to give us all of that information and enlighten us as to whether or not the guidelines have changed or tightened up. So.
Yeah, I mean, that's every single day people hit the retirement age one way or another. They need to do something. In some cases, people are, you know, house rich, cash poor. So in some cases, reverse mortgage is a perfect product for them. Although they need to sit down and counsel with someone to make sure that they understand the reverse mortgage, because completely different than conventional financing for sure.
And we were talking about the fact that lending, it can be prone to all kinds of schemes and all kinds of not so great people in it. I guess you can say that of almost any profession. But Joe,
when reverse mortgages got started, I know they really did kind of have a little black dot against them, but I've helped seniors get them, and they are a wonderful product.
They are, if it's for the right person, the right product. And you're right, they did have a bad name. Unfortunately, it comes down to finding the right person, the professional, the person that's ethical, that you could trust. We talked about it before. Make sure you're aligned with a professional, someone that understands reverse mortgages. And if you don't know of someone, make sure you contact someone like you or a trusted advisor that could introduce them to someone who really knows what they're talking about. That's key.
And they do go through a process where they are actually guided through this.
Right.
I mean, they can't just go in and say, walk into a bank and say, give me a reverse mortgage, because there are a lot of nuances to it.
Yeah, one of the things that they've done, which was helpful, they've added components to it where you have to go through counseling, both on the telephone and in person. And they make, you know, if you're a little bit on the side where you don't understand them, they're going to bring one of your children in, or maybe someone that you have a relationship with, so that they really understand what they're getting into.
So explain how they do work.
Well, a reverse mortgage is just kind of what it says. It's reverse of what we're used to. Normally we get a mortgage, $200,000, we start to pay it down. A reverse mortgage, let's say your home's worth $700,000 and it's owned free and clear. They may give you $300,000 cash out. You could use that money however you wish, or there's payment programs. There's a number of different things you could do. So how that works is there's an interest rate attached to that as well. So as you use that $200,000 to $300,000, you're actually building up principal. So that $200,000 or $300,000 loan over a period of time is going to be $325,000, $350,000, $375,000, depending on the amortization schedule.
And right now, with the interest rates the way they are, I would say that that probably would be a great way to do it. I mean, some people want to liquidate stock to put a roof on their house. That's not smart, because that's a growing asset, hopefully.
Yeah, there's no doubt. And this is where it comes to meeting with a financial planner and really looking at everything as a whole. What are you going to do? And that involves your home, your liability. So in a reverse mortgage, sometimes it makes a lot of sense to take the stress off someone. It eliminates their mortgage payment. That's one of the biggest factors. That's one of the biggest advantages to reverse mortgage. You no longer have that payment.
And I understand that it is the person, it is the home that is qualified, as opposed to the person without a, well, they're retired.
Great point. Normally in traditional financing, you come in, you look at W-2s, you know, income tax, your ability to qualify, your job, those types of things. With a reverse mortgage, the house qualifies. And so it really doesn't matter so much about credit, your assets, like it does traditional financing. You're really, the lender is banking their financing against that home and not necessarily the individual.
And I understand also that there is a misconception out there that you get the house after the person passes on. So, you know, enlighten us to that.
Yeah, there is a misperception about that. So typically what happens is you put the reverse mortgage into place, and then over a period of time, whether the person passes away or something happens and that they're no longer in that home, that would then, they would go to a trust or the will and find out who the beneficiary was, and then deal with, and they could actually buy that house, or they could actually refinance that home depending on what the bank is going to do. And it depends on what the value of the home is over a period of time. You know, if that original loan was $300,000 or $400,000 and equity grew 20 to 30 years later, a lot of that will depend as well.
Well, I know that there are a couple of programs. You were talking about lump sum, or else taking it out in smaller chunks. What are the pluses and minuses of those? Yeah,
and really it depends on how you want a custom fit for each person. So there's a lump sum you could do. There's also a payment plan where you could schedule, you know, I'm going to take $2,000 or $3,000 a month from this, or you could use it as an equity line. Most people are familiar with the home equity line. They have the similar thing with reverse mortgages. So it's really having a checkbook and an equity line available, so you could write against that equity line at any time you want. So there's a few options. Well,
is there more cost involved to one of the programs as to another? I guess if you take the lump sum, you would start paying that interest rate on that whole lump sum.
Yes, absolutely. So more costly. And in general, I'm glad you brought that up, because one of the things that surprises people, reverse mortgages are very, very expensive in terms of cost and fees. They know that up front, and that's front-loaded quite a bit. Interest rates have a tendency to be a little higher, so you are paying a lot more for that money than one. But still, most people, if they're in the position where they need that, that's the only alternative.
And I've understood that there used to be fees that had to be paid out of pocket that now can be wrapped into the loan. Is that correct?
Right, that's correct.
That insurance, there's an insurance
Right, there's a mortgage insurance component as part of that too. It's really involved, and that's why a summary was great. But if someone's interested, the best thing to do is sit down with a professional and go through it step by step, because it is involved. I don't want to mislead someone and say, oh my God, this is magical, and you still have to sit down and get qualified for it.
But Joe, the cool thing is that people, and this is what I see, seniors are overwhelmed. The house is leaking, they're still in it, the roof, you know, it has to get maintained, because once mold sets in and you start getting cracks because the foundation's got too much water and you need to get a French drain around it or something like that, now you're destroying the asset you want to leave to your family. So it sounds like a wonderful way to do it.
It really is. It's a wonderful alternative to someone that really needs some financial help and support. And in many cases, some people, if they've been in the Bay Area, they've been blessed enough to have all this equity in their home, so why not use it and live the rest of your life the way you want to?
Wow. Thanks
right?
very much. And see, we have the best guests. Now you go out there and have knowledge, but remember, do get somebody that you can counsel with. Never try this on your own. Do not do it in secret and not tell your family. Have a trusted advisor by your side. And thanks, Joe.
You're welcome. My pleasure.
Today, Sotheby's International Realty, bringing new technology to a 200-year-old tradition while serving the San Francisco Peninsula, Silicon Valley, and clientele worldwide.